What are the meme or Reddit stocks? Technology continues to change the investing and trading community. With online discount brokerages and internet access to instant stock information available to the average person, stock market trading is no longer left only to large financial institutions. Recently, the power of social media websites has created another major factor in stock trading, referred to as meme or Reddit trading. Individual investors, called retail investors, have begun to use social media platforms, such as Facebook, TikTok, Instagram, YouTube and Reddit to discuss stocks and try to manipulate its stock prices. Members of these communities talk about specific stocks, and at times, they have ganged together in an attempt to drive up a stock's price. To learn more about this trend, continue watching, but first, please take a moment to like our video, and subscribe to our channel. Perhaps the two stocks that first revealed the power of social media to influence a stock's price are GME, GameStop Corporation, and AMC Entertainment, which began in January of 2021. The 10 million members of Reddit's Wall Street Bets community, along with small traders in other social media platforms, were able to drive the price of these stocks sky high. The pandemic may have been a factor in accelerating these coordinated events, because many people had to work from home. The fact that brokerages, like Robinhood and Webull, have no-cost trading along with many traders receiving stimulus checks also contributed to this new concept, which is being done mostly by individual young traders. One of the reasons that the GameStop stock was targeted may be because small traders wanted to show hedge fund managers and large financial institutions that individual investors should not be dismissed as poor, uneducated investors. These big institutions at the time had sold a lot short shares of stock on GameStop. Short selling is where an investor or institution sells shares of stock in a company, but they borrow the shares of stock at the current price, and then when the stock price goes down, they buy the shares at a lower price to replace the shares they borrowed. The difference between the price they borrowed the shares at and the cost they paid for replacing the stocks is their profit. The individual investor community worked together to hype up the GameStop stock and began buying shares of stock, driving the stock price higher as demand rose. Their motive was to hurt the big institutions by triggering a short squeeze on the stock. The financial institutions who had many short shares of stock wouldn't make money unless the stock price dropped. The higher the stock price rose, the more money it would cost those institutions to buy and replace their shorted shares. As the demand for shares of stock rose, a huge rally in price began. This put a short squeeze on the stock, and the hedge funds and institutions had to buy shares of stock at a higher price to cover their losses. Small investors continue to talk up specific stocks on social media platforms. While following these stocks and even jumping in on the craze is exciting and fun, this is purely speculative trading, not based on any hard facts about the value of the company or the real value of the stock. Playing these volatile stocks is very risky, and there's a good chance traders will lose money. Don't fall victim to the fear of missing out on stocks that are making huge price rises caused solely by the comments on social media and online forums. The list of these Reddit stocks changes all of the time. You can easily see what stocks are currently being heavily discussed at the website www.reddit.com/r/wallstreetbets. These stocks fall rapidly when traders take quick profits, so if you decide to trade any of these stocks, be sure to monitor them closely or have stop-loss prices in place.